Good morning, Tim Sykes here. Just wanted to go over my latest trade on HMNY. It's working out quite nicely. These are the volatile stocks that you should be trading, okay? A lot of you guys are trading, I see hundreds of different stocks, and no matter the press releases, no matter what the management says, no matter how promising a technology seems, focus on supernovas. Focus on these plays that are spiking up and down so much, that are so volatile. Because volatility, even if it's scary volatility, is good for trading long and short. And that is what you really have to know. That's why I'm trading HMNY, because this is my kind of a chart. This is just the past 100 days. Let me show you the past 30 days. Okay? From 6 to 38, back down to 9, now, up to 12. This is volatility. And this is very similar to Bitcoin. Bitcoin is the hottest asset class. This webinar is tomorrow, okay? I'm going to link it one more time, but don't you dare say that I did not warn you like 50 times about this upcoming Bitcoin free webinar on November 2nd. I believe it's at 8 p.m. Eastern. So if you can tune in, you should, because frankly, as I've said several times, I personally have been a little narrow-minded, a little biased against learning and trading Bitcoin, and that's a mistake, because Bitcoin and all these cryptocurrencies, there are also roughly 1,000 cryptocurrencies, are very volatile. And despite all the hatred, is it a scam? Is it going to keep going? Is it going to be revolutionary? I don't know, okay? What I do know is that it is volatile, and volatility is what you should be looking for. And that's why, I'm so proud to trade HMNY. I got to give a shout out to Roland, who has, now turned 4,000 into over $300,000 in just the past 9 months, 10 months now, this year. And he actually had a better entry than me. I bought it in the low 10s. He bought it in the low 9s. He's been waiting, and he said this in the challenge chat. Many of you guys are talking with him. He's been waiting for the first green day. Oh, and we're pre-market right now on HMNY as I'm filming this. Why is this not opening? There it is. 11:20 pre-market. I don't know how high it goes, but it had its first green day. Okay, if you've seen my penny stocking framework guide, when you have supernovas that spike up so much and come down, the first green day is usually a good day to buy. The momentum can carry forward. Some shorts get scared. You can see here it actually had a first green day here after the big drop off from 38 down to 20, and it actually went down to 18. And then the next day it bounced all the way up to 23. This is a $5 a share bounce. It doesn't look like much. And again, I'm not really good at $20 stocks, let alone $10 stock share prices. So this bounce ultimately failed. And then look at this. Here you can even see this had a little bit of a green day. And on the low, even though it finished here in the 15s, the next day it did touch 18. And, even on some of these red days, it's been bouncy. But it's very tough to play just a choppy stock and say, oh, this is the bottom, this is the bottom, this is the bottom. But the first green day is significant. More importantly, what I want you to understand is how a stock closes matters. Yesterday, this one was very nice. It morning spiked. So first of all, when a stock morning spikes, that tells me, okay, it has potential to, move up, even if it doesn't hold it. You'll see a lot of these morning spikes with penny stocks, and then they come right back down by midday or by the afternoon. And they never come back because maybe the company did some sketchy financings. Maybe they have, just some big sellers. Maybe they have some bag holders who are just looking to get out at any price. But you have the morning spikes and then failure. That would not have led me to buy HMNY here in the 9s. I give props to Roland. Roland is taking these patterns and doing what works best for him. For me, I'm not interested in just seeing, something like this where you have the morning spike and then you have the failure. What really interests me here is this kind of cup and handle formation where, the stock starts to come back up to 10. I'm still not buying yet because I still want it to prove that it can take out the morning spike. But when you have a supernova and when you have a stock that is down this much and you have this volatile kind of a play, you're looking for signs of bottoming. Morning spike is sign number one. When it starts fading again, now you have to say, wait a minute, is it really going to hold? Is this morning spike just kind of an aberration? Maybe it'll come back down. But I'm still watching it. Then when it starts to coil in here, you might say, wait a minute, back on. This could be a first green day. If it's the first green day, then it might have another morning spike like this the next day, even if that morning spike fails. But it double tops here, okay? The morning high is 10. The afternoon high right here is like 996, and then it comes all the way down to 950. So at this point, I'm not thinking about buying because the double top is now in place. So I want it to prove itself, and this is exactly what it did right here at around 3 p.m. It proved itself above 10, and it actually went too quickly. I was watching it. I got a call literally for like 5 minutes. I'm planning this event with Larry King in Los Angeles in 10 days. So I'm kind of doing a bunch of stuff. But there was a call about this Larry King event, and I'm glad some of you guys are coming. And I missed this because it went so quickly from 10 to 10:40. And at this point, I don't want to chase it. It's still not the market close. If this was at like 3:45 p.m. or 3:50 p.m. Eastern, where the market is closing in 10 minutes, I would have chased it. But at this point, I don't want to chase it because you can't see this, but right here, I mean, it's like 3:20 p.m. So the market does not close for another 20 minutes. So we've seen this in the past. I was buying this the other day where I was buying it, I think around 3:30 or 3:40 p.m. There was still like 30 minutes to go before the market closed. And even though it looked like it was breaking out, it dropped 40 cents a share late day. And, I was down 40 cents a share roughly overnight. And that sucked, in the last few minutes. So this stock is a potential bottom for me, but it has to prove itself. And I want to position myself for a potential morning spike the next day. That is why I bought it in the 1020s here, which actually turned out quite nicely because it already has the breakout above 10. It's probably going to be the first green day. It had a morning spike. It's the single most volatile stock in the market. And now at 1020, $10.20 a share, $10.25 a share. It is 3:40 p.m. So the market is closing in roughly 15, 20 minutes. So we're closer to the close. It's closing high. It proved that it could hold the $10 a share breakout. If it had broken below $10, I would have simply exited. So that was my plan. When I'm buying it here in the 1020s, if it breaks below 10 and then somehow like this afternoon spike fails, okay, it goes below 10. Now I cut losses. I lose 20 cents a share. That is my risk. But I was never down from the point I bought it. I actually only got a partial position. I wanted 3,000 shares. I got like 1,500 shares. It started spiking very quickly because all of these indicators came together. The stock is down a ton. First green day, nice afternoon breakout, actually intraday cup and handle. And, at this point, you have so many positive indicators. Some short sellers who have been shorting since the 30s, they probably want to cover. When short sellers want to cover, that means that they're going to buy, which pushes the price up even more. And that's exactly what happened. And we got a nice short squeeze. Even pre-market right now, it's at 11.25. So all of this, it's gone $1 a share since my buy. I did not give it enough time. Again, this is not my sweet spot, $10, $20 a share stocks. First green day is nice, but this has also had several, fake out first green days. Even though it bounces, you have to sell into the bounce. So I made my roughly 50 cents a share, or like 40 cents a share even, just because I'm scared to trade this stock. But at the same time, even though I'm scared, I'm looking at the several indicators piling up. And when enough indicators pile up, that tells me, wait a minute, the odds favor this going up. Worst case, when I'm buying it in the 1020s, if it did break below 10, I lose 20 cents a share. I probably could have done a better job selling it, making 40, 50 cents a share and risking 20 cents a share. So it's like 2-to-1 risk reward, not so great. As it turned out, there was no downside, and now there's $1 of upside. But you don't know, what it's going to be when you enter the trade. All I want you to do is start looking for signs of bottoming in volatile stocks. And I want you trading these volatile stocks. I know $10, $11 a share is a little too pricey for some people. I wish this were a lower price stock. I wish I was a baller. I wish I was a little bit taller. But at the same time, this fits my pattern, not necessarily to a T, but close enough. And Roland recognized it. And, you know, if you ask Roland in the chat room, he'll say it's a number 5 pattern for my penny stocking framework guide. And he loves dip buys, and I like dip buys. But at the same time, I don't want to just dip buy a stock like this. Some of you guys were asking, why didn't you just buy it at 9? Because too many penny stocks, or too many, you know, low price stocks, or too many supernovas have morning spikes and they never come back. I want it to come back, and I want it to prove itself. And you can see here, you know, some people probably bought it right here at 990, and they're like, well, I thought it was going to break out. But you didn't wait for the breakout. I like waiting for the breakout and confirmation. So you had 2 opportunities to buy this in the low 10s. Okay, if you were quick right here and you weren't on a call with Larry King's manager, or on the dip, which is when I got it. And that is how I want you to start thinking. So if you understand this video lesson, leave a comment underneath that says, always look for bottoms. Leave those 4 words and trade volatile stocks like this. And again, one last reminder, this Bitcoin webinar is tomorrow night, November 2nd. And it will not be replayed. It will not be recorded from what I understand because, frankly, why? You know, you either want to learn or you don't. So check it out. I'll see you guys in the chat room.